Now, let's move on to the next section and start with the introduction of fundamental analysis. By definition, fundamental analysis is a method for determining the fair market value of a stock and is typically used to make long-term investment decisions. We generally try to make this assessment by evaluating the financials of a company and by understanding the prevalent economic conditions. This means going through the company's financial reports, reading the annual report to understand the business and its opportunity, and assessing overall economic conditions and whether they are favorable for the company's growth and performance. Apart from this, there is another kind of analysis that we should be doing, which is basically evaluating things that are not easily quantifiable or explained by numbers. This is known as qualitative analysis and can include things such as the quality of management, the perception of customers of the company's attitude towards its employees. This is just to name a few. Thus, combining the two aspects discussed, we can easily classify fundamental analysis into two categories for a study. One, which is the quantitative aspects. This will include things like profit growth, sales growth, return on equity, return on capital, the debt held by the company, etc. And the second will be the qualitative aspects, which will include things like management quality, shareholding pattern, what is the corporate governance structure, what is the salary structure of higher management. So by evaluating on these two aspects, we can make a very robust assessment of a company and its underlying potential in the long term. So buying companies which have sound fundamentals actually lead to wealth creation, whereas buying companies with questionable fundamentals may lead to wealth destruction in the long term. Over here, we have the price charts of ICICI Bank and Yes Bank, and you can clearly see how these stocks have performed in the last few years. So one more thing that I would like to highlight is that smart money or institutional money, which is basically money held by mutual funds, investment companies, treasuries of banks and various other organizations, that generally tends to flow towards fundamentally strong and stable companies. So another way of assessing if a company is strong is by checking its ownership pattern and look for ownership within these institutions. So if you want to, basically what I'm trying to say is if you want to follow the footprint of smart money, always invest in a fundamentally sound and strong company. And also this institutional money brings about a lot of stability to the stock price, as institutions typically have a long-term mindset while making their investments and they do not sell that easily. So let's delve deeper into the two aspects we discussed earlier, and let's start with quantitative analysis. So before you begin, you first need to understand where the company is in its life cycle. Is it in the introductory stage? Is it in the growth stage? Or is it a mature company? And based on this only, we will be able to evaluate these metrics. And the second thing that you can do is to compare these metrics with the peers of the company within the same industry. So that way you can very easily assess how the company is performing when compared to its competition. So some of the things that you need to look at while doing quantitative analysis is profit growth. These are just some of the things that I've listed. Obviously the list can go on based on what industry or what company we are analyzing. So I'll just discuss some examples. So profit growth, is the company able to deliver consistent profit quarter on quarter? Is the sales growing quarter on quarter? For a growth company, this is very important. Margin growth, is the company able to control cost to improve margins? As the company matures, this is very important. Operating efficiency, is the company able to bring in economies of scale to control cost? What is the pricing power it holds in the market? Dividends paid, is the company paying out dividends or is it reinvesting the profits to fuel the growth? Cash flow, does the company have free or positive cash flow which it can reinvest in terms of buying new machinery, new plants to fuel its growth. Debt. Does the company have debt on its books? And what is it doing to reduce the debt? Is the debt rising or is the debt falling quarter on quarter? Investments. Is the company buying new businesses to kind of sustain its growth? And then there are certain aspects which are industry specific. So, for example, if you are in the banking space, then you look at non-performing assets. If you are in the retail space, you look at how many stores it is able to add every quarter. So, stuff, things like that. So basically, I'll discuss in the next slide where you can get all this data and how you should be comparing it. But a lot of things of this is available online, and I would encourage you to read up and understand more so that you can make good quality assessments. Now, the second thing that you should look at is qualitative analysis. So these things are not available freely, and these actually have to be investigated by reading the annual report, by reading articles, maybe by talking to people who work within the company. So some of the things that you should be looking at is management quality. What is the pedigree of the top management? How much experience do they have working within that industry? Promoter salaries. Are the promoters taking a lot of money out of the business to pay themselves? Are they buying and selling shares or engaging in speculation of their own stock? Is there any operator activity? Is there any abnormal movement of the stock price? Political affiliation. This means that if the owners of the company are affiliated to a political party and basically does it require any kind of support from the any kind of political support? Who are the main stakeholders of the company? Basically, who owns more than 1 or 2% shares? Are they from the are they from the owner's family? Are they from abroad? So this is also important. What is the lifestyle of the owners? Are they splurging money or are they frugal? Because these things then reflect in the business as well. Then you can go visit the stores, branches, and see what kind of experience they are offering, how are they treating the customers, and obviously, also very important is how the company actually treats its employees. So good quality like good companies mostly will come through in all these parameters, and you will be able to assess once you look into these things the companies that you should actually be investing in. Now let's take up a quantitative analysis case study where we will be comparing the stocks within the FMCG sector. So all the metrics that you need to make this assessment, actually you can get it from a lot of websites online, but something that I use is called screener.in. So let me just first take you to the website and then we will come back here. So over here you can see we are on the home page. So basically you can put any company over here and you will get all the data that you may need. So HDFC Bank. So this is the stock P, book value, market cap. It also shows you a chart of the stock price. Then certain ratios that are industry specific, capital adequacy ratio, net interest margin, gross non-performing assets, net non-performing assets. So if you're not aware of these terms, just simply Google them. They are very basic and very easy to understand. And once you understand what they are, you can compare these across banks. It also shows you peer comparison of other banks within the industry. Then you can get all the quarterly data, the yearly profit and loss, the yearly balance sheet, cash flow, shareholding pattern. So anything that you would need to conduct your analysis, you can get on this website. So, but for our purpose, we will go to screens. It has these preset option of sectors, and we are looking for FMCG, which is here. And once you open, it automatically publishes the list according to market cap. So yeah, so starting with HUL, which has the highest market cap. So we will be comparing the top 10, so HUL to Hudson Agro, and the metrics that you want to compare. So right now we will be using quarterly profit, sales growth, operating profit margin. So all this is editable. So you can just go to edit columns, and any parameter that you want to add, you can select here. So you can just, let's see, suppose you want to add sales. So we click on sales, it gets added here, and it will get reflected here. Right now we are not adding this. So let's do the assessment based on these parameters that we have shortlisted. So for that, let's move back to the slideshow. Let's start with the analysis. So over here, as you see, we have listed the top 10 FMCG companies as per market cap. So the first step, as we had discussed earlier, is to identify where the company is in its life cycle. So let's look at them one by one. HUL, Nestle, Dabur, Britannia, Godrej, Marico. So I think the first six we all are very well aware of. They have a very diversified product portfolio. They are very well established, and all of them are at least more than 2 decades old in the market. So I would say I would actually categorize all of them as mature companies. Varun Beverages actually is relatively new, and it was IPO'd a few years ago, and I would put this in the growth category. P&G again mature, Colgate mature, Hatson is again a growth company. So if you're not clear on where they are in the life cycle, you can just Google it and find out when the company was incorporated, when was it IPO'd, and how does the management see, and how does the market see the company. And I think that will be that with that you will be able to assess where it is in its life cycle. So for the M category, we will be looking for consistency in terms of profits, in terms of sales, and we would obviously also be looking for profitability. For the growth category, we will be looking at change in rate of change in quarterly sales and change in profits. And also, if the company is profitable, it's a good sign. So let's start our analysis. So first, HUL. Over here, you have the quarterly profit variance, basically, which is the rate of change of profit quarter on quarter. This is very good, negative, negative. This is good, negative. This is good. Growth will come later. This is okay. This is negative. Now this is the profit variance over 3 years. So over here you can see this is called consistency. So there is it has been able to maintain the same rate of profit growth over a 3-year period, which is actually very good. This is also good. This is okay. This is okay. This is negative. So I don't think I won't underline. I won't mark this. This is okay. This is good. This is good. So I think all of them have been able to grow profits at a decent rate. Then this is the quarterly sales variance. This is extremely good. This is good. I think all of them are in positive. So sales is healthy and growing across the sector. We are actually looking for consistency. So this is the sales over 3 years. Good. Yep, nothing wrong here. So over here, I would say this is consistency. This is consistency. This is consistency. This is also good. This is good. This is good. Okay, moving on. Operating profit margin. So this basically tells us the profitability of the company, and the higher the better. So for a company of this size, this is extremely good, and it is actually leading the pack. Okay, no, we have this here, but the size is obviously much smaller. So one, two. So these are highly profitable companies. This is also good. I think all of them are extremely profitable. So nothing wrong here. So in terms of, so this is ROE and ROCE, that is return on equity, which is return on shareholders capital, and this is the return on total capital. So over here we will not compare this directly. All we need is that the company should be making money, which obviously all of these are. And in most cases all I want to see is that this is either this is positive. If it is positive, it should be greater than 15%. That will be a healthy. So this, there's nothing wrong. So all of it's, this is good for all of them. Then earnings per share, Nestle is extremely high. This will be probably reflected in the PE, which is also very high. Yep, they're all good. There's also nothing wrong here. They're all highly profitable companies. So it's actually very difficult to choose from this lot, but still we have to make a decision based on consistency, because profitability I think is taken care of. So in terms of price to earnings, basically, which is the stock price compared to the earnings per share per stock. So over here you can see Nestle is the highest. The industry average, industry PE. I don't know why this is not consistent, but I think let's just compare. So this is close to the industry PE. This is much higher. So I would say this is, oh, this can be termed as overvalued. This is also much higher than the industry PE. This is good. This is okay. It's higher. This is undervalued. This you can see, we can say term as overvalued. So over here also I think HUL is kind of near about industry PE. So this is good. Then dividend yield. So they all are paying healthy dividends except for this, and the two growth companies obviously are not paying much dividends, so which is very normal. And the promoter holdings is above 50% in most of them, which is a great sign. So nothing, no red flags here. So now, so if we have to choose the most stable mature company, I think we would go for HUL, Nestle, and we have Britannia and PNG. So all of them are growing at a very steady pace. They have healthy profit margins. They have healthy return on capital. So this is something that we would take to the we would shortlist from here. And now looking at the two growth names, I think this is rather easy. Just look at this. These numbers are exceptional compared to this one. So obviously the clear winner for us here is Varun Beverages. So now we have actually shortlisted four mature companies and one growth company out of the top 10. And if you actually want to further, if you just want to take maybe one or two mature companies, just then you filter based on market cap, because generally the best companies or the sector leaders tend to be the top ones in the sector. So if you have to further shortlist, I would go with 1, 2 and 3. So actually for qualitative analysis, there aren't there is no website like Screener where you have all the data and everything that you would need. So this actually is a skill that you develop with time after you start doing it for a few companies. For this, so I've just mentioned some of the tools or things that you can go through. First place to start with would be the annual reports, where you can read the management commentary. You can understand what the vision the company has for itself, from where it has come, and from where it wants to go over the next 5 to 10 years. Then you can also check out newspaper reports, newspaper articles, where a lot of financial and business news agencies keep publishing things about these companies. Also, check out the company website, or if it is a technology company or if it has an app based product, check out the app and see how user friendly it is. See what your experience is in terms of ordering something online. If it's a product company, suppose it's selling mobile phones or it is selling a car, go to the showroom, sit in the car, take a test drive. If you use its product, suppose a shoe that you've used for a lot of time, or someone who is a big proponent, ask them what they feel about the product. Is their quality improving or deteriorating with time? So things like that. If the company is maybe in retail or in banking, then you should visit the branch or the retail outlet, see how many people are there, what is their experience like, are they able to actually get their work done smoothly within the store, or are they really struggling to get attention of the staff? So things like this. Also, another important thing is who's actually running the company. So you should read about the management and the board of directors. Yeah, if you want to find out more about them, go to LinkedIn and search their profiles. And most of the times it will be mentioned on the company website, but if it is not, then you can always do your own research. Another thing would be to look at customer reviews online. So Google reviews is one space, or there are a lot of review websites which put up a lot of information. So any company that you are actually trying to analyze, Google about them, and you will actually find out a lot of things. So I think if doing this would be, if you do this for two companies within the same sector, you will definitely see the differences that exist, and it will be very easy for you to make an assessment in terms of which company is stronger in terms of qualitative analysis.